Hey everyone, welcome back to the show. So 2026 in the silicon carbide power semiconductor world on the surface. It looks calm, a little too calm if you ask me, but beneath that glassy veneer, the currents are churning harder than most people realize. The speed of change, the intensity of the fight, this is arguably the most compelling drama in the entire semiconductor industry right now. And as an American watching this from our side of the Pacific, I can tell you we have a lot more at stake here than most folks back home realize. This isn't some distant tech squabble. It's about who controls the guts of our EVs, our data centers, our entire electrified future this year. The global semiconductor industry sits at a weird inflection point. On one side, you've got the legacy international giants, the usual suspects, going at each other's throats over trench versus planar architectures. They're digging ditches in their chips, squeezing every last drop of performance out of every micron, each one screaming that their path is the one true future. On the other side, the Chinese mainland players are eerily quiet. No massive press events, no blitzkrieg of media coverage, no flashy press releases that we Americans are so used to seeing from our own tech sector. But behind that radio silence, they're doing something far more dangerous. They're churning out wafers at what looks like throwaway prices, silently but brutally reshaping the global cost curve for power semiconductors. And let me tell you, everyone in the industry feels the heat, including our own American manufacturers who are watching their margins get squeezed in real time, and our policymakers who are only now starting to wake up to what's happening. This isn't a simple, high-performance, crushes, low-cost story anymore. It's a full-blown, multi-front war, part technical chess match, part market reality check, part state-level industrial strategy that we Americans need to pay close attention to because it directly affects the competitiveness of our own EV and tech sectors. From EVs to AI data centers, from industrial power supplies to solar inverters. Every single high-performance silicon carbide chip carries the weight of billion-dollar bets on the future and razor-sharp calculations on current profits. Whoever gets ahead here isn't just winning a battle, they're locking in dominance for the next decade of power semiconductors. And if we're not careful, we could be playing catch-up on our own turf, watching Chinese-made chips power everything from our electric trucks to our grid infrastructure. One, the international arena, planar vs. trench. Diverging paths. Let's start with the comeback kid, Planar Tech, in June 2026. While the whole industry was staring at complicated trench gate structures, all those fancy diagrams and cross-sections that look like city skylines, American silicon carbide material heavyweight Wolfspeed, one of our own homegrown players threw a sucker punch that made everyone rethink their assumptions. And this punch landed hard, disrupting the so-called conventional wisdom overnight. For us Americans, this is a source of pride because it shows our domestic innovation still packs a serious wallop, and it proves we're not just coasting on past glory. Their new 5th gen Sigma Fit Tech still sticks to the old school planar architecture, no trendy trench bandwagon here, no chasing the latest fashion, but the results stunning, absolutely stunning. Their 1200 volt platform achieved a new industry low specific on resistance per unit area under extreme heat, especially at 175 degrees Celsius, which is basically hellfire territory for semiconductors, and even pushed the max junction temperature north of 200 degrees. For high power density applications like EV main traction inverters. Those things that turn battery juice into wheel spinning torque, that's a game changer translation. Wolfspeed just proved that Planar Tech still has a lot of gas left in the tank, and it reminds us that American engineering can still lead when we put our minds to it. Even against all the trench hype flooding the trade journals, then you've got Smicroelectronics, the old European veteran and longtime planar champion. They cashed in big time early on with Tesla's first adoption, and let's be honest, that American EV pioneer gave them a massive leg up by betting on their planar tech back when everyone else was still skeptical, building a market position that's almost unassailable from their next-gen product blueprints. They're sticking with planar. No pivot, no sudden change of heart. And honestly, when you dominate market share and have tight client relationships that have been forged over years of reliable delivery, your biggest edge isn't the flashiest, riskiest tech. It's the most mature, stable, reliable solution that you can ship in volume without breaking a sweat. Because clients don't want to gamble their product lifecycle on unproven science experiments. They want supply security, predictable performance, and a partner who won't spring nasty surprises on them. And that's a lesson we Americans understand well in our own industrial sectors. On the other hand, ON Semi is playing a completely different commercial game with a distinctly American flavor of pragmatism. Their latest planar platform, launched just 2 years ago, was already so far ahead of the curve that they now have the luxury of not chasing any hype. They can just sit back, watch the trench circus, and collect checks. Recently, they started reconfiguring their check fab capacity, cutting internal manufacturing and sourcing from cheaper supply chains, which is a very American way of saying, we're not going to bleed money on old fabs, their calculus. When planar designs are mature enough, don't bleed money on expensive fabs. Buy cheaper wafers, maybe even from those quiet Chinese players, and focus your energy on high-value packaging, modules, and system-level solutions, where the real margins are. That's smart, asset-light business, thinking that any American CEO would appreciate. Because it's about maximizing return on capital, not ego. And guess what? Their core platform is already adopted by Xiaomi's newest EQV and Geely's next-gen high-voltage EV platform. Real orders, real validation, not just marketing fluff. And that should worry American automakers who are competing in the same global EV market and seeing Chinese brands eating their lunch with cheaper, nearly as good components. 2. Trench tech deepens from ditching to sculpting. But don't think the trench camp is standing still, twiddling their thumbs. In 2026, trench competition is moving into deep engineering and real-world application scenarios far beyond the lab toys and academic papers we saw a few years ago. Each player is carving its own niche, and this is where the global race gets really intense from our American perspective. We need to watch every single move because our own auto and industrial sectors are directly plugged into these supply chains. And any disruption ripples back to Detroit and Silicon Valley faster than you can say supply chain shock. In the past, we obsessed over physical structures, who digs deeper, who's got the clever angle, who's got the most dramatic cross-section micrograph. Now, it's all about scenario-driven solutions that actually solve problems for real customers. Take Mitsubishi Electric. They're going after next-gen EV3 in one integration with 5th-gen bare die samples, clearly aimed at highly integrated e-axle systems that car makers are dying to put into production. They're pushing system-level efficiency, not just chip-level numbers that look good on a datasheet but don't translate to real-world range. Bosch dual-channel trench design, it's targeting thermal and efficiency bottlenecks in traction inverters head-on because they know that heat management is the single biggest headache for every EV maker out there. Their thinking is far closer to what automakers actually need compared to some of the more academic approaches we see from other players. These divergent paths show that trench tech has exited the concept validation phase and entered the deep water zone where specific system pain points dictate design. And that means our American engineers need to stay sharp because the bar keeps rising and the Chinese aren't just copying anymore, they're innovating in their own quiet way. At the same time, structural evolution reflects a newfound respect for industrial reality, the kind of reality that American factory managers deal with every single day. Rome, always famous for radical double trench structures that made headlines and won awards, surprisingly in their latest 5th-gen products, have pulled back from extreme trench depth and complexity. Instead, they're fine-tuning manufacturing processes and device structures to boost high-temperature stability and long-term reliability, which are exactly the things that matter when you're putting 1 million of these things into cars that will run on American highways for 15 years. This tells you one thing: in the harshest automotive applications, and let's face it, American roads and driving conditions, from Death Valley heat to Minnesota winter, are pretty brutal. Structural extremism must bow to reliability, yield, and cost. No sane company trades long-term trust and single-digit PPM failure rates for architectural bragging rights. Because in auto, a single recall costs you a fortune, wipes out years of profit, and destroys customer confidence. And that's a lesson American automakers have learned the hard way over the decades, from the Pinto to the Takata airbags. Now, talking about tech fusion and boundary pushing. Infineon's asymmetric trench, or semi-trench, depending on who you ask, once again showcases that meticulous, no-nonsense German engineering culture that we Americans both admire and compete against. They don't chase the bleeding-edge numbers of full trench designs that look great in press releases, but may have long-term reliability question marks. Instead, they use large protective layers to ensure gate oxide reliability, sacrificing some specs for durability. Because in their view, a chip that lasts is better than a chip that briefly shines, Classic German pragmatism, the kind that built the Autobahn and the world's best machine tools. And more interestingly, Infineon is signaling they're actively researching superjunction silicon carbide tech, aiming to break the physical limits of unipolar devices for even higher voltage scenarios. Think megawatt level charging stations and grid scale inverters. That's long-term playmaking, even within the trench framework. And it tells us the Europeans aren't resting on their laurels either. They're already thinking about the generation after next. On the process side, wafer thinning is emerging as the new critical bottleneck that everyone's sweating over. Bosch, for instance, slashed wafer thickness by 40% down to an astonishing 100 microns. A few years ago, that number was unthinkable. Something you'd only see in a research paper. Why? Because once you've optimized surface electron channels to the point where they're almost perfect, the substrate resistance and thermal path become the weakest link in the chain. If you don't solve that, all your fancy surface engineering goes to waste. Who can safely, efficiently, and cheaply grind brittle silicon carbide wafers thin and uniform without shattering them into expensive dust? That's the entry ticket to the next race. No shortcuts, just real manufacturing muscle. And this is an area where American semiconductor manufacturing needs to invest heavily if we don't want to fall behind the Europeans and the Asians who are already scaling this up. 3. The Quiet Chinese campaign, 3 layers of strategy while international players are locked in a loud, complex structural arms race complete with press releases, white papers, and conference panels. The Chinese mainland silicon carbide industry seems unusually muted, almost invisible, but don't mistake silence for inaction, laziness, or lack of ambition. Behind it is a disciplined, layered, and ruthlessly executed strategy that's rewriting industry rules from the bottom up. And as Americans, we ignore this at our peril because our own supply chains are increasingly intertwined with theirs, whether we like it or not. First, the strategic focus is fundamentally different from ours, and dramatically different. Those overseas giants, after milking the last generation of planar tech for all it was worth, now need to sell a tech gap story to capital markets to maintain margins, stock prices, and industry speakership. Trench technology becomes their natural moat, their way of telling investors we're still ahead. Don't worry. But the Chinese mainland's immediate priority, with 800-volt fast charging about to go mainstream and explosive EV and solar growth that's already reshaping their domestic auto market. They're racing to build a fully self-sufficient supply chain, from substrate to epitaxy to wafer fab, using mature, reliable products to grab market share right now. Feed the beast first, get the product out the door, secure the customer base, build the volume as Americans. We need to recognize that this isn't just about technology, it's about who controls the pipes and valves of the global supply chain, and they're playing a long game that we're only now beginning to understand. For the vast majority of applications, especially the rapidly scaling mid to high-end EVs that are flooding showrooms from Shanghai to Berlin, mature, high-yield planar silicon carbide is more than enough. You don't need trench wizardry to make a solid EV inverter. And they're leveraging rapid yield improvements, which come from running fabs at full tilt, to push production costs to an almost absurdly low level. Their real killer weapon, the extreme cost-performance ratio that makes their offerings irresistible to any procurement officer with a budget. Thanks to massive scale, industrial clustering that puts suppliers right next to fabs, and certain energy and labor cost advantages that we in America simply can't match, Chinese mainland manufacturers can produce a 6-inch wafer at 1/3 or even less of what international peers spend. That's the kind of pricing power that creates a gravity, that pulls in customers from all over the world. Even international players are feeling it. Witness onsemi pivoting to external wafer sourcing, basically admitting that they can't compete on cost for certain things. That's a wake-up call. And American companies need to think hard about how they compete against that kind of cost structure without sacrificing quality or innovation, because you can't out-Asian the Asians on cost. Second, quiet tech hoarding and research and development. This is the part that scares me the most. Honestly, silence doesn't mean inaction. Many top Chinese power device firms have been quietly developing 8-inch silicon carbide wafer tech for years, and they're not ignoring trench process research and development either. They're just not tweeting about it. Universities, research institutes, and leading firms have been filing patents and publishing papers on trench gate processes, just not shouting about it in the Western trade press. In their current phase where commercial deployment and market share dominate, They keep their PR tight and resource allocation laser focused on what actually moves the needle. The playbook: secure the market with planar tech, generate profits, bankroll next-gen research and development, and strike when the time is right, when the technology is mature enough to not have teething problems. That's deliberate, measured pacing, and from our American vantage point, it's the kind of long-term strategic thinking that we sometimes underestimate when we're focused on quarterly earnings and shareholder returns. We tend to want everything now. They're willing to wait a decade. Third, and perhaps most critical, supply chain security. This is the bedrock of everything they're doing. While the world debates tech generation gaps and who has the better microscopic structure, the Chinese mainland's top concern is building a complete, self-reliant silicon carbide ecosystem, from raw sand to packaging and testing, every single step under their own roof. That strategic autonomy, ensuring no single external entity can choke off supply, whether it's the US, Japan, Europe, or anyone else, carries far more weight than chasing the cutting-edge chip architecture. Today, this long-game vertical integration is a deeper competitive logic, and anyone who dismisses it as just nationalist bluster is making a huge mistake. For Americans, this should ring alarm bells, because it means they're systematically reducing their dependence on us and everyone else. And that reshapes the entire geopolitical and economic landscape we operate in. It's not about winning this quarter, it's about ensuring they can't be cut off in a crisis. 4, underlying industry logic and the end game. Looking at the tech and market dynamics, 3 underlying truths in 2026 Silicon Carbide arena stand out. These are the real deciding factors, and they matter just as much to American businesses and policymakers as they do to anyone else on the planet. First, the shift from structural one-upmanship to yield and cost. This is the big one after a period of structural fetishism where everyone was obsessed with who had the most complex trench profile. The industry is settling into a more pragmatic balance. Rome's strategic tweaks, the planar camp's resilience in the face of trench hype, Wolfspeed's obsession with high temperature performance, all point to the same sweet spot: maximum performance, rock-solid reliability, and acceptable cost, all in harmony. Flashy tech without manufacturing yield is a dead end. That's semiconductor law number 1. And American fabs know this better than most because we've seen boom and bust cycles before, from memory chips to microprocessors. The winners aren't the ones with the prettiest electron microscope images. They're the ones who can ship millions of working parts at a profit. Second, competition has evolved into a systemic game that spans continents and industries. It's no longer just about chip spec numbers that engineers argue over in forums. It's about full system integration, chip design marrying substrate quality, thinner wafers requiring advanced packaging and cooling, and gate designs ensuring short circuit protection in real-world vehicle environments where a single failure could be catastrophic. It demands a closed-loop capability spanning design, fab packaging, system validation, and customer co-engineering. Every single piece has to fit together perfectly. Any weak link in your toast because your competitors will exploit it. American companies with decades of systems integration experience have a natural edge here, but only if we keep investing across the entire chain and don't let any single link rust. Third, in-game speculation. Hybrid tech and specialized division of labor. This is where it gets really interesting. Navitas Trench Assisted Planar Tech in early 2026 offers a twist that nobody saw coming. You don't have to pick one side, you can merge them. The future may not see planar or trench winning outright, with one side declaring total victory. Instead, we'll likely see a hybrid and split landscape in niche markets where absolute performance trumps cost, like aerospace or high-end racing, complex trench, or even super junction structures will dominate. But in cost-sensitive, high-reliability mass markets, which is 90% of the business, highly optimized planar solutions will reign supreme. They'll coexist, feeding different needs, and American companies will have to decide which segments they want to own and which they're willing to cede. At the same time, wafer manufacturing specialization will deepen significantly. Design houses, foundries, and full-stack IDMs will find their own profitable niches. Some will focus on design and system solutions, outsourcing high-end fab work, a model that many American fables companies already excel at, and it served them well for decades. Others will stick with IDM to protect IP and ensure consistency. which some of our big American IDMs still swear by because they don't trust anyone else with their secrets. And Chinese mainland players may evolve from low-cost substrate providers to high-end foundries and eventually top-tier design, climbing the value chain step by step, which means they'll eventually compete head-to-head with our best on innovation. Not just price. That transition is already happening, and it's faster than most analysts predicted. The final verdict, looking across 2026, a stark contrast is clear, sharper than ever before. The international heavyweights are deep-sea diving in cutting-edge architecture, fighting for the next decade's performance ceiling with all the resources they can muster. Meanwhile, the Chinese mainland supply chain is storming the mass-market beachheads using cost and scale to redraw the global supply map. Two completely different battlefields, two distinct modes of warfare, two radically different definitions of winning. And here in America, we're not just spectators in the stands, we're right in the middle of this brawl because our EV makers, our industrial giants, our grid operators, and our national security interests are all riding on who comes out ahead. This isn't someone else's fight, it's ours, whether we like it or not. But here's the kicker. Winning this war can no longer be measured by any single technical metric. It's a multidimensional contest of national scale capabilities, sustained innovation, cost control at scale, supply chain integration efficiency, and unwavering strategic execution that can outlast political cycles and market fads. Nobody's winning this before the final whistle. And frankly, the final whistle isn't even in sight yet. It's a marathon, not a sprint. And as Americans, we'd better be training for that marathon right now. Investing in research and development, upgrading our fabs, securing our material supply, and educating the next generation of engineers because the starting gun has already fired and we're already a few laps in with some very fast runners ahead of us and some very hungry ones closing from behind. Still, one thing's absolutely certain. The fierce competition is already delivering better performance, lower costs, and more abundant supply than any single company or country could have achieved on its own. All of that will ultimately accelerate global electrification, smarter systems, and clean energy transitions, which are good for the planet and good for our economy. And honestly, that's probably the biggest societal contribution and the outcome we should all root for, whether we're in Detroit, Silicon Valley, Austin, or anywhere else in this country. At the end of the day, tech is supposed to serve us, right? It's supposed to make our lives better, our cars cleaner, our grid more resilient, and our future brighter. All right, that's all for today's episode. Thanks for hanging in there. I know it was a long one, but this stuff matters, and you deserve the full picture. If you found this useful, drop a like, hit subscribe, and share it around. Your support keeps me going. And trust me, there's a lot more coming on this front. This story is far from over. See you next time.